Hi guys, it's Thomas here from COTBase.com. Welcome to your weekly COT review. Today we're going to be analyzing the 7th Commitments of Traders report of 2024. And as we always do, we shall start out by looking at the largest changes in commercials net positions. Of course, we're analyzing the classic COT report, which has the longest history of COT data. We're analyzing futures and options data combined. As you can see, we have copper on top of our list. We're looking, of course, at the largest changes based on a 52-week look-back period, which, of course, corresponds to 1 year. Here we have the 1-year chart, and you can see this 39% in commercials who are represented with the red line. It is a very decent-sized change, possibly the largest top 5 largest changes in the past 1 year. If you look over here, you can see that basically the report is for Tuesday, but we get it on Friday. So it would have been nice to see this on Tuesday, because of course you can see that there has been a reaction already in the market. So it's a bullish change signal. We've already witnessed a reaction. Will this continue is the big question, of course. If we move to a 5-year chart, you can see that not only do we have a bullish COT change signal, but actually we have a more bullish stress level in the market as well, which of course means that commercials net positions are close to their all-time COT extremes, and that in itself is a bullish signal. So we may see the continuation of this rally witnessed on Thursday, Friday, in the next days, weeks, and month to come. We shall see. The next market is the Japanese yen. Here we have a 35% change in commercials net positions. It is a currency, of course, and as I've said many times in the past, as COT data is not derived from price, you always got to look at it individually. And I find that in currencies, anything above 15-20% can be considered a significant change in traders' net position. So the 35 is definitely there. What's better than copper is the fact that we're still in decline mode. So this larger than average change, of course, suggests we should see a bounce, a bit of a strengthening in the next couple of weeks, or pardon me, next couple of days, and we may see Japanese yen strengthening. Now, if we move to a 5-year chart, we can see that it's supported. This bullish move is supported not only from the COT change signal, but also from the fact that we are in a more bullish stress level zone right now. Okay, so of course, if you look at this 5-year chart, it's unquestionable. But even if you just take roughly the half of it, you can see that it's kind of bouncing in between these levels. We're still looking at commercials net positions. One thing I would advise you to do is come check out iCOT Intraday Indicator that we developed at COTBase.com after many years of research. It brings down this longer term analysis technique into the short term. This is a 4-hour candlestick chart of the Japanese yen, and you can see that it is supported. This bullish COT change signal is actually supported by this larger signal from the system. It's a stripe signal. If you want to read more about what this tool is, come here to COTBase.com, check out indicators, and the right side is this special unique I standing for intraday. And here you will see a couple of great example charts that can explain what sort of signals we differentiate. It is not data from CFTC. I'd like to outline that. It's important. However, we did use COT analysis as a method to come up with the indicator. And I think it works very, very well. I think this Japanese yen is a great example of that, not only supporting what we just found in the classic COT analysis, but also you can go back and see how well, around the tops we're getting these bearish signals. Around the bottom over here, you can see bullish signals from the system. AfterSignal, which is a special I say upgrade to the iCOT Intraday Indicator. AfterSignal basically helps you identify the point where you actually will take that signal and trade. So I think it's a very unique way of analyzing markets. It supplements classic COT analysis very, very well. And by the way, this was a 4-hour candlestick chart, but I can show you, you know, how it looks on a 1 hour. I do believe that it is a very, very useful tool to have. Let's look at, I don't know, 15 minutes. Here's a 15 minutes a candlestick chart. So yeah, it's definitely something geared towards shorter time frames. I think it's great to use it in combination with classic COT analysis. So let's move on and have a look at Palladium here, where we have an all-time COT Extreme. But before we jump there, we also have a larger than average change size, 28%. You can see it over there, larger than average. We have seen such changes in the past. You can see over here, this was a larger than average bearish COT change signal just around that top. I think that was a good signal. Now we have a bullish change signal suggesting strengthening, not in, you know, in the near term. COT change analysis is usually successful or can be used to identify short-term swings in the market. A longer term picture, a 5-year chart, gives us the opportunity to examine the stress levels, how overbought or oversold traders are right now. You can see that we have an all-time COT Extreme, not only in commercials net positions, but in large speculators as well. So it is coming after Palladium has been in a decline for quite some time now, suggesting that we may actually have reached a bottom. We shall see what happens. These all-time COT Extreme can be present in the market for many, many weeks, months actually, before anything happens. So it's something you should be looking at. Moving on to large speculators, COT Extreme analysis. Of course, we talked about Palladium here. So we're going to jump over that and open Corn, where we have a 249 report extreme in large speculators net positions, but an all-time COT Extreme in commercial. So again, it's a quite obvious, a very, very clear signal from COT data. After Corn has given back almost half of its value, we are getting these very, very strong signals. And you can see what happened when Corn was producing these bullish extremes back over here from mid-2020s. You can see it was correlating with the bottom in the market. So again, caution is advised. These extremes can widen for many, many weeks before anything happens. The next market is Soybean Meal, 206 report extreme over here. Again, something very, very clear. Soybean markets tend to react to these extreme signals very, very well. Again, bullish extreme suggesting a bottoming happening not too far in the future. And then last but not least, for this COT review, Mexican peso. Here we have a 204 report extreme. However, this is more of a bearish extreme. On the 5-year chart, you can see that we have some space left to reach even greater extremes. So I think that's something you should take into consideration. Nevertheless, it is a more bearish picture from the COT report than bullish, that's for sure. And that is all for this COT review. Of course, if you are interested in a more in-depth and detailed COT analysis, then COTBase.com offers you all the tools needed for that. Not only COT change analysis, but all the other ways to examine stress levels. We look at the COT extremes based on net positions, but you can actually look at COT index, COT move index. We have a long-term trend indicator, volume and open interest analysis. A lot of great tools here at COTBase.com. Thank you very much for your attention. I hope you enjoyed the review. If you're experiencing any difficulties, need assistance, help, please let me know. Just send me an email to info@cotbase.com or comment underneath the video, and I'll try to answer your questions as soon as possible. Have a wonderful weekend. Take care and goodbye.